Friday, the relief rally closed at record highs. The S&P 500 finished at an all-time high, the fear gauge collapsed, and oil fell to an 8-week low, the whole tape exhaling on hopes that a deal to end the war gets signed this weekend. But here is the catch: nothing has been signed. And this is a settlement weekend in 3 different ways at once. A geopolitical signature the market has already priced, but does not yet have. A central bank doubleheader landing Monday, the Bank of Japan hiking to its highest rate since 1995, and a brand new Federal Reserve chair running his first meeting. And underneath both, the quiet one, the plumbing of money itself, being rebuilt and regulated, as stablecoins clear tens of trillions of dollars on-chain. So where is the edge? Not in the relief everyone is chasing. The durable shift is the one nobody is trading, who owns the settlement layer of money just as the state moves to regulate it. The rails, not the rally. This is the asymmetric. This is the asymmetric, issue 16, the settlement, tech and crypto investing for thoughtful retail from an operator's lens. The relief rally closed at records, but 2 signatures are still missing this weekend, and the deepest story is the rebuilding of money's settlement layer that the new rules are about to bless. Here's the one-line read. Risk is at fresh highs, the S&P 500 a record 74.31, the fear gauge down 9%, and Brent crude down more than 4% to an 8-week low below $84, all on hopes of a deal to end the war. The president says it signs today, Sunday, with the Strait of Hormuz open to all immediately after. But Iran disputes the timing, and nothing is signed. The tape is pricing a handshake, not a signature. Next week, 2 central banks land in the same window. The Bank of Japan, about 97% priced to hike to 1%, its highest since 1995, with its governor hospitalized and missing the meeting, and the Federal Reserve, the new chair's first meeting, almost certain to hold against a hot 4.2% inflation print. And underneath it all, money's settlement layer is being rebuilt and regulated at once. The durable read: own the regulated rails the new rules are about to bless, and respect the rate sensitivity baked into their economics. The same discipline labels run throughout: confidence, high, medium, or low, consensus versus variant, what the market believes and where we may differ, and on every call what would change our mind. This is research, not advice. Part 1, the settlement, a signature, 2 reaction functions, and money's rails. The regime at a glance. The S&P 500 closed at a record 74.31, with the fear gauge down 9%. Brent crude fell more than 4% to an 8-week low below $84. The deal with Iran, still unsigned, the president says it signs Sunday. Iran disputes the timing. The Bank of Japan, set to hike to 1% next week, its highest since 1995, with its governor absent. The Federal Reserve, almost certain to hold, against a hot 4.2% inflation print, and gold holding near $4,200 even as the war premium fades, while Bitcoin sits on its 200-week moving average. The relief is priced on an unsigned deal, and 2 reaction functions reset next week. Start with the signature the tape has already priced. The president posted that the deal is scheduled to be signed today, and that immediately after, the Strait of Hormuz is open to all. The reported terms: a 60-day ceasefire extension, the strait reopening with pro-war shipping restored within about 30 days, and Iran foregoing enrichment for 15 to 20 years. But Iran's foreign ministry disputes the Sunday timing, and the defense secretary says only that the sides are on track. The market has priced the handshake, Brent at an 8-week low, the fear gauge near 17. A failed or delayed signing this weekend reprices oil and volatility violently the other way. Trade the de-escalation, but hedge the gap between a handshake and a signature. Then the real event of the week, a central bank doubleheader. The Bank of Japan is about 97% priced to raise its policy rate to 1%, the highest since 1995, and the wrinkle is that its governor is hospitalized and will miss the meeting. A higher Japanese policy rate compresses the carry trade, the cheap funding leg under a large share of global risk, and carry unwinds have repeatedly hit Bitcoin and high beta first. The same week, the Federal Reserve holds at 3.5 to 3.75%, the new chair's first meeting, against a hot 4.2% inflation print, with the signal a shift from an easing bias toward neutral. Two reaction functions reset in 1 week, one of them under a chair the market has never seen run a meeting. The projections and his tone are the message, not the held rate. Then the havens, gold held around $4,200, firming even as oil fell and risk rallied. That divergence is the tell. With the war premium fading, the bid that remains is structural, reserve diversification, and dollar debasement demand, not the tactical war premium. We cite gold by level and driver, never a contested period return. Bitcoin held near 63,500, above its 200-week moving average, the line that has marked past cycle bottoms, trading as a high beta liquidity proxy, not a haven. It is holding the cycle line, but the near-term headwind is the Bank of Japan hike and the carry channel. Put it together, the relief rally is at records, but the durable variables are still open. An unsigned deal the tape has already priced, 2 central bank reaction functions resetting in 1 week, and quietest of all, the plumbing of money being rewritten. Stablecoins clear tens of trillions of dollars on-chain. China is building a state-run cross-border settlement network, and new rules are hard-coding which issuers win. The relief is priced. The signature and the reaction functions are not. The rails are being built regardless. The edge, optionality, less duration, less leverage, plus the regulated settlement rails, the new rules are about to bless, with the rate sensitivity in their economics respected. Part 2 in focus, the toll taker on the dollars on-chain rails, the data, then the debate. The lead is Circle, ticker CRCL, the issuer of the most regulated dollar stablecoin and the cleanest listed expression of the settlement layer itself. Our workup pulled its numbers live from its regulatory filings. First quarter revenue was $694 million, up about 20%. Reported net income was $55 million, down about 15%, as post-listing stock compensation rose. Its stablecoin in circulation reached $77 billion, up 28%, and roughly flat even through a 45% drawdown in crypto, which tells you the franchise is stickier than the asset. It now handles around 63% of all stablecoin transaction value and clears more than $20 trillion on-chain. The bull case, a profitable, dominant toll taker on the fastest-growing rail in money, where regulation is a tailwind. Not a threat, the bear case is the catch. Its revenue is reserve interest, the spread it earns on the safe assets backing every coin. So a falling rate cycle compresses the very line the bull case rests on, which makes next week's Federal Reserve signal directly material to its earnings. This is the rare name where the macro section is the company section. The structural case is high confidence. The entry and the rate path are the hard part. Own the thesis, price the rate sensitivity. In crypto, the rails are the story. Circle's stablecoin cleared more than $20 trillion on-chain in a single quarter. China has a state-built cross-border digital currency network that has now settled over $55 billion across China, Hong Kong, Thailand, and the Gulf. And the United States, having already passed a stablecoin law, is advancing a broader market structure bill that hard codes which issuers and structures win. The durable signal is structural. Money's settlement rails are being built and regulated at once, and the beneficiaries are the most compliant issuers and the incumbents, not necessarily retail. Bitcoin, meanwhile, holds its cycle line into the central bank week. And the thematic read, the plumbing of money, rebuilt and regulated at once. 3 forces are converging: private rails, the dollar stablecoins becoming default settlement infrastructure, sovereign rails, the state-built cross-border networks, and the rulebook, the new laws hard-coding the winners. The regulated, dollar-aligned settlement layer is a strategic asset, and the listed toll takers on it are advantaged. But be wary, the same rules that bless the rails also cap some of their levers. They cannot pay yield to holders, and the toll taker model is a bet on the level of short rates. Own it for the franchise, not for a higher rate world that may not last. Part 3, the settlement signal. The relief is real, but the deal is still unsigned. Trade the de-escalation, hedge the gap. The week's real event is the double-header, the Bank of Japan's hike to 1%, and the new Federal Reserve Chair's first meeting. In the same window, the carry channel is the underpriced risk. The quiet settlement is the durable one, money's rails being rebuilt and regulated. and Circle is the listed expression. With a rate catch, profitable and dominant, but its revenue is reserve interest, so a higher for longer Federal Reserve helps it and an easing cycle hurts it. Where the edge stays, optionality plus the durable rails. What we are watching the next 10 days, the Iran signing an actual signature today or this week versus a collapse. The Bank of Japan the 15th and 16th, a hike to 1% with its governor absent. The Federal Reserve the 16th and 17th, a hold and projections that are directly material to Circle's reserve income. The market structure bills progress through the Senate. Circle's reserve rate against the rate path. Oil against the war premium. SpaceX's aftermarket. And whether Bitcoin holds its 200-week moving average into the central bank week. And we keep score in public. Circle, the lead settlement trails name profitable and dominant, but rate sensitive and richly valued. Palantir, the sovereign artificial intelligence name, the one the state needs on. Talon Energy, the power the build must buy. EQT, the same theme, lower leverage. Freeport-McMoRan, the copper bottleneck. SpaceX, the window is open but don't chase. Gold, the structural bid holds. Bitcoin, a macro liquidity tape on the cycle line. Each is a dated, falsifiable call, and we grade them. So where does it land? 3 takeaways. The relief is real, but the deal is still unsigned. Risk closed at records and oil fell to an 8-week low, but Iran disputes the timing and the tape prices a handshake. The week's real event resets 2 reaction functions, the Bank of Japan's hike and the new Federal Reserve Chair's first meeting in the same window. And own the settlement rails the rules are about to bless, Circle, profitable and dominant. The regulated toll taker on the dollar's on-chain rails just price the rate sensitivity because its revenue is the very interest the central banks are about to reset. The edge is optionality plus the rails. That's the settlement. The asymmetric turns filings, flows, and market data into one disciplined read for investors who want the evidence, not the noise. This is research, not personalized advice. Verify it yourself. The tape settled the relief. The signature, the reaction functions, and the rails are still being written. We'll see you in the next issue.